Welcome to the XY Advisor podcast. To join a global community of financial advisors sharing and learning with one another to drive the positive evolution of financial advice, head to xyadvisor.com. This episode is proudly sponsored by Integrity Life. Just like XY Advisor, Integrity isn't afraid to ask the hard questions, like why does quoting life insurance have to be so darn complicated? Why can't you just do it all online? Why can't underwriting be more consistent? And why can't claiming be just that little bit easier? To find out how Integrity is doing all these things differently and more, head to integritylife.com.au/XY. G'day, how's it going? What do you know, Strike a Light? I'm here with John from the SMSFA. Mate, thank you for joining us.
My pleasure, Clayton. Great to be here.
Yeah, of course. So one of the first questions I was thinking about asking you was, when did the name change occur, and why did the name change occur with the SMSFA now that it's known as?
Yeah, very good question. And it occurred before I arrived here, so I've been here just over 3 years.
Right.
I think it was sort of 4 or 5 years ago, so not long before I arrived.
Yes.
And it was a deliberate decision by the board when they were adopting a new strategy that says we have, through our existence, represented the whole SMSF sector, but we've done that primarily through focusing on the professionals that are involved in that sector, the financial planners, the accountants, the lawyers, the auditors, the actuaries, and they've got hundreds of thousands of clients that have self-managed super funds. But the board decided to be a stronger way of expressing the voice on behalf of the whole sector to say, look, we do represent the sector, not just the professionals. So at that stage, it removed professionals from name, became the SMSF Association. And one of the added benefits was that removed the this acronym from SPA, because we used to get people ringing up saying, can you recommend a good SPA bar? And I don't know whether they'd heard about some of our early conferences well before my time, but no, we're no longer confused with the SPA Association.
Yes. Yeah, you get a lot of people looking for a luxurious weekend. I'm here for the SPA Association. That's hilarious. Okay, cool. Yeah, because someone brought it up the other day that mentioned the SPA, and I said, oh, that's the old name for the SMSFA, isn't it? And okay, that makes a lot of sense. Now, if I look across your board, you've got Tracy, Liam Short, Mark Houlihan, yourself. I mean, these are only the people that I'm aware of, and I'm sure that there's others. I mean, they're some of the most well-respected, experienced, highly valuable people in advice.
Yep.
So, I'm keen to hear what sort of an effect that has on your association when you have people like that in the room making decisions.
Well, there's a number of impacts. One is it means we can really plug into what our members are thinking because we've got practitioners on the board, but we also have a group of non-practitioners that are there wearing their director hats. They're there from a governance background. They bring different skills and capabilities, and so we have a good mixture of the board. The board takes it very seriously with a nominations committee of looking at how do we keep up that skill mixture and make sure we've got a good succession plan. So we did change chairs around this time last year when our former chair, Professor Deborah Ralston, who's a very highly regarded academic and well regarded on Reserve Bank Payment System Board and other boards, when the Treasurer personally contacted her and said, would she like to be a member of the Retirement Income Review panel? So when you lose your chair to a higher calling of helping Australia plan for its next few decades of retirement income policy, you can feel, yes, the board's doing a good job of getting high caliber people on the board, whether they're practitioners or whether they are experts in their own field that brings together a mix of skills for the whole board.
Yeah. And does it make your job easier knowing that you've got these people around to help make decisions?
It's certainly
or more challenging.
A better result. I won't necessarily say easier. I can't sort of lay back and say the board's so good. I can just sort of let them meet once every month or two, and the rest of things go smoothly. So We've just sent up the latest fairly substantial board pack to them yesterday. We try to get it under 100 pages. We failed dismally yesterday. It's over 200 pages, including financial statements, budgets, policy matters, operational matters, planning for our next conference. And they will diligently go through and look at all that material, and we'll have a really good discussion on the screen next week. And we always get good discussions, good guidance. And it really is a very productive and engaging part of my role, is that interacting with the board and helping to use them as a sounding board, to pick the brains individually and collectively so that we can both choose the best path forward strategy and then call on their help to execute things where it's crucial that we need to bring everyone along, and they've got all their connections in the corporate world, in the financial advisor space, in the accounting world. And a lot of what we do is working with partners and having them as a core of helping us reach out to the rest of the world, particularly being based in Adelaide. There aren't as many connections here as if we were based somewhere else, but the history is we grew up as an Adelaide National Association. We're still an Adelaide-based National Association, and usually I'd be on and off planes travelling to Sydney, Canberra, Melbourne, but I can do Sydney, Canberra, Melbourne in one day, courtesy of the screen. So we're actually finding there's probably more opportunities gained than problems created in the short term. We don't want to lose face-to-face forever, but yes. I think we'll look back at this year and say we learned so much this year about how to engage with our members and the world virtually, and the board's been very, very supportive with that.
Awesome. Yeah, look, we're in the exact same position, even though we're quote unquote a little bit younger, not really at this stage, but people often expect us to be far ahead of the adoption curve. Now, we have been using Zoom for about 4 or 5 years, but I tell you, we've only just now started doing our weekly meetings digitally, or I should say due to COVID, right?
Yeah.
And so that, it's taken us a long time. So we're in the same boat as everyone else. It is a matter of great for efficiencies to do meetings digitally. And as I noticed, there's always that worst case scenario if your meeting gets stood up and the person forgets to come. When you're doing a digital meeting, it doesn't matter. Someone didn't come to a meeting the other day. They're like, oh my God, I'm so sorry. I'm like, that's fine. I didn't actually slow down. I was just in front of my computer the whole time. So it sort of removes the risk of taking a meeting as well, which I thought was quite interesting. Here's a question just regarding tax accountants, because obviously tax accountants do a lot of SMSF work, and they've got their ability to, their accountant cutout that allows them to do a certain amount of advice, right?
Yeah.
Is that something that the SMSFA gets involved in trying to say, actually, we'd like to tidy this little loophole up? Or is it something that you're glad exists? So I'm kind of interested from your point of view, do you see accountants getting involved in, it's not quite advice to call it that, but at least, the ability to recommend an SMSF. Do you see that as a positive thing or a negative thing? And what's your stance, and what's the association stance?
Yeah, so it's an interesting history. Again, that limited license for accountants was set up before I arrived, but I've certainly had reason to explore the history. And so up until about 2016, there was an exemption. So every accountant could go and sort of help people set up self-managed super funds without having to have any sort of license. And then the rules changed. And so you had to at least have a limited license under an AFSL so that you were allowed to do so. And we supported the creation of that. And we had expected there would be a much larger growth and usage of that limited license than turned out to be. But since then, we've had the whole creation of the FSEA requirements, and they apply fully to accountants that are working under a limited license compared to a financial planner.
Oh.
So even though you might only be helping people set up a self-managed super fund and helping them start pensions and make contributions, you have to go and make sure you've met all the educational requirements. You have to sit the exam. You have to do all the CPD, which we say, look, that's not really recognising the fact that those with limited licenses are not allowed to do all those things. So why do you force them to do basic training and continuing training when the law doesn't let them give advice in any of those areas? And I think what has come about is they've built the FSEA requirements and totally ignored the limited license for accountants when they did so. And so you've got a real mismatch. So we've now reached the conclusion that the limited license framework hasn't worked. It's broken. We should transition away from that to something else. And we are working with the 3 accounting bodies and the FBA to come up with a better model that would replace what we've got at the moment, including replacing limited licenses for accountants with something else.
Interesting. And does that mean running... I guess I already know the answer before I ask it if I look at the trends, but is that running further to compliance or is that running away from compliance?
Well, I'd answer that by saying the way we describe what we're doing is trying to come up with a more consumer-centric framework for the regulation of financial advice.
Yes.
So compliance will be a necessary part of it,
yes.
But first and foremost, it should be what is going to better meet the needs of clients, whoever they are.
Yes.
And some of those clients want to talk to an accountant about a self-managed super fund. That should be part of the answer. And yes, you will need some compliance wrapped around that, but compliance should come well after the event of let's design something that's fit for purpose for the customer. And a lot of the compliance at the moment is all about risk management for the licensees, ignoring the customer.
Mate, what is this client centricity you're talking about? That's hilarious. That's such a great point. And it's really cool. Do you often get to include yourself, or does the SMSFA often get asked to be included in changes and in rules and regulations? Like, are you and your team on the outer of the accounting bodies, or do they accept you in and consider what you have to say as an equal, or are you seen as sort of a bit of a distant cousin? Like, how does it all work?
Well, we're different. We're not the same as another accounting body. There's 3 major accounting bodies in Australia. We have good relations with all 3 of them. We have regular conversations at the working level and at the more senior levels. We have been working very much in this project with them and the Financial Planning Association because it's such an important issue for all 5 of the bodies and other bodies. It just happened that the circumstances that led to that group of 5 associations getting together meant it was 5 groups. There could have been more. Couldn't really have had less. We could have had more, and over time it will sort of broaden out. But working very closely there, we have a formal memorandum of understanding with the Institute of Public Accountants, as we do with the Financial Planning Association. We have those with other organisations as well, where it makes sense. We have enough sort of shared goals and are wanting to work together. But our general approach is collaborate with everybody that shares enough interest, as long as there's a cultural fit. And even if there isn't, you'll still sort of have dialogues. We talk to a lot of groups that are perhaps not supportive of self-managed super funds to try to help them understand, so that hopefully if they are making negative comments about our sector, they're doing it from an informed basis, not misinformed, which sometimes happens. And also so that, if we want to have a private conversation, even if there's a big fight going on in the public arena, which sometimes happens.
Absolutely.
I think there was some last year with groups calling there's got to be an inquiry into the self-managed super sector. They didn't. They got carved out of the Royal Commission. They should be. We're saying, well, why? But we try to have good connections and communication with all groups that have an interest in superannuation financial advice, whether they're the industry side, whether they're policymakers, government, opposition, crossbenchers. So one of the things I did this week was write off to policymakers, including those I mentioned there, and senators, because there's a bill before the Senate at the moment about increasing the maximum number of members in a self-managed super fund from 4 to 6.
Interesting.
So we would like to see that go through. There's a Senate committee inquiring into it. Deadline for submissions is tomorrow. We'll send them in a submission tomorrow that states the case, why we think that's a good move. And we know not everyone's going to support it. It's the government tried to get it through before the election last time. They weren't able to get full support for it in the Senate, so it sort of dropped onto the back burner. But we're hoping something like that should be non-controversial. Most self-managed super funds are 1 or 2 people. We don't think there'll be a big rush for setting up 5 or 6 people, but I've got an Irish Catholic sort of background. I'm sure some of my friends from school have still got the larger families. And you don't want to leave, if you've got 3 or 4 children, you don't want to leave 1 or 2 of them out and say you can't be in the family. You got to go and do something separate yourself.
That's hilarious. The big thing that's topical at the moment with self-managed super is Dixon Advisory. Now, interestingly, many moons ago, I actually worked as a financial analyst there. I mean, a paraplanner, basically.
Yep.
I mean, there's always these things that happen, and I guess ASIC learns about it after the fact, and then I mean, everyone. It's obvious that everyone can sit here now, and ASIC's the one that's drawing attention to this and say, oh, right, if you create a company that sells self-managed super funds plus sells the investments inside the self-managed super funds, you're essentially creating a vertical. It's insular. It's a lot smaller. It's not a massive AMP, but essentially you're creating a vertical situation. Do you think off the back of something like that, we'll start to see the diminishment of SMSF providing capabilities with investment providing capabilities?
Yeah, I'll just make it very clear in regards to Dixon's. We have a policy of not commenting on any issues that are before the courts. That is
great.
Before the courts, so I'll just leave that aside.
Sure.
We'll certainly watch with interest as what happens, but the general question of vertical integration, I think it's an important one. The Royal Commission had a close look at it. They raised a number of concerns and they are being dealt with by the marketplace. They decided there wasn't need to actually recommend to the government that vertical integration should be banned or restricted. It was focused on, look, you can deliver sort of on a best interest basis through a vertical integrated structure, but a lot of times that may not happen based on the evidence they saw. So we think that's the right way of going about it, that the focus should be on what's best for the customer. And, I bought a new car a few times in my life. Each time I've sort of gone to a car dealer that sold those sort of cars.
Yes.
I did not expect the Holden car dealer to sell me a Ford or the VW one to sell me a Range Rover, though now I think they've actually got some brands, maybe they would. But I knew that very clearly, and similarly, when people went to AMP many years ago, they knew if you went to talk to someone from AMP, you were going to be sold an AMP policy if that was what was recommended and you accepted the recommendation. There was no surprise about that.
Yes.
And similarly now, and it's not just retail funds, most of the large industry funds employ financial advisors or contract them or have in-house advice, and they provide advice. They would encourage people at retirement to keep their money in that fund and go into a retirement product. That's another form of vertical integration, and I think that's a valid proposition. I think as long as the disclosure is good, anyone providing advice is acting best interest of the clients, and you've got a good product and sale. And ASIC's now got more powers for the design and distribution obligation arrangement, so they can more carefully and proactively sort of look at areas where they might think there's risks to consumers or egregious behaviour. They can act more quickly with those enhanced powers. So I think it's better to let the marketplace sort of sort that out through the lens of what's best for the customers. Some people would much prefer to go and deal with their bank, their insurance company, their superannuation fund or their accountant and say, look, these are my financial issues I have to deal with. Can you help me look after most or all of them? No, I don't want to go and see 6 different companies and 4 different advisors. Just, can you be the ringmaster? And yes, you might need to get reports and information, but I'd prefer to have primarily a conversation with you and deal with you and products that you are comfortable with because I trust you. I like you. I think what you're offering me is good value for money. And that's far more valuable to me than shopping around 20 different places where I don't know if the pieces fit together. I don't know if I can ever trust 20 people to help me. And that really should be driven by the customer, not by policymakers saying this structure is allowed and this one's not allowed.
Cool. No, that's super fair. In fact, we may end up seeing the return of the agent, so to speak. Obviously, like there is a strategy. IOOF is now arguably the biggest financial services company in Australia. And they've got a view, and whether or not I'm not even sure if they've publicly come out and said yet that this is exactly our strategy and this is why we're going after it. But they're obviously going after something that would imply that potentially that that we're going to come back around to an agency type of advice, so that the AMP agent, or in this case the IOOF, can do exactly what you've just said. Offer some, you're here. We do this. You know, the funds under management that they've got now is just insane. The efficiencies and the cost savings and all that sort of stuff is going to be out of this world. And so I think there's going to be an argument to say that, well, you know, what we tried to achieve post FOFA, which was, you know, looking all over the world for the best thing, you know, but do you end up with more of a cacophony of situations because it's a little bit spread across everywhere, and I don't just have one ability to handle everything in one place except via the advisor. Look, I mean, it is interesting because a lot of the times everyone agrees with what needs to happen. It's just we don't necessarily all agree with how to get there in the in-between parts. So it's always interesting to see, or at least to hear people's opinions. Before you came on as, you know, heading up the SMSFA, what's your background? Like, how long have you been in financial advice and specifically in dealing with SMSFs? And what, I guess, attracted you to this role?
Very happy to talk on that. But just one last point about the advice side. I think there's, say, a bigger problem with than poor advice is lack of advice. So I think there's far more Australians that are missing out on valuable results, valuable outcomes, because they don't get any advice because they're afraid to get any advice compared to those that actually suffer from poor advice. And a classic area I saw this was a presentation last year, I think it was, and they were looking at stats for how long it takes someone eligible for the age pension to actually get the age pension. And something like over 12 months. The people are turning 66, 65, 66, 67, and on average, because of the process of knowing how to go through it and get involved, they're missing out on 6, 12, 18 months of age pension because it takes that long to work through with Centrelink and other things. And so that's crying out for better advice, better system, a whole range of things. But I think, well, you know, if it's 12 months, that's $24,000 for a single, $36,000 for a couple. That can pay for a lot of good advice. And the fact that, you know, people are missing out on advice altogether, that's a symptom for that.
Yes. No, very good point. I fully agree to that. The small episodes of bad advice keep way too many people away from getting advice at all. That goes without saying, definitely. Yeah. So how did you end up leading the SMSFA, and what's the background here?
Well, I've been in finance one way or another all of my career. So I actually started my financial career at university on an A&P scholarship training to become an actuary back in the 70s. So
that is awesome.
I go back for over 40 years. And since then, I've worked in a range of places, superannuation for most of them, but mixture of superannuation, insurance, regulation, pensions. So I started A&P, very much doing corporate superannuation and things related to corporate super, but also I was on the board of A&P Super Limited. So I was oversighting when Master Trust were first being set up back in the 90s. Wow. So that was an interesting experience. I did get a stint down in Canberra as government actuary. So I had Paul Keating as my minister while I was churning out actuarial reports and helping set up the Insurance and Superannuation Commission as part of the leadership team there, and getting involved in all the things that happened, well, not all of them, but many of the things that happened under Paul Keating as treasurer.
Wow.
So that was an interesting stint that probably led me into my involvement with associations. So I've run a number of associations. The first one when I left A&P was what was then called LISA, but it's now called the Financial Services Council, where Sally Lone is. So I ran that as they were merging to set up, what was that there? A merger with the life insurers, the retail funds managers, the wholesale fund managers. And then I had a stint working as a consulting actuary with initially Trowbridge Consulting, then Deloitte. So I had a stint there as a partner of Deloitte, which was interesting seeing what the big four are up to.
What was that like, actually?
It was fascinating, just in terms of, because Trowbridge Consulting merged into Deloitte. So you went from a fairly small specialist actuarial firm into a large global body. And so I got some interesting global work, stint over helping the authorities in Thailand strengthen the insurance regulatory framework for Thailand, for the Thailand Department of Insurance.
Yeah, wow.
I worked on the M&A from NAB buying MLC.
Whoa.
I worked on Commonwealth Bank in New Zealand buying Sovereign Life. So,
Wow.
some work outside Australia, some work with some very brilliant sort of people in both the actuarial side and the broader side. It was when they brought in review of life office taxation, goods and services tax, so that whole process of helping the financial sector to deal with changing tax environments, impact on product design, pricing, valuations, competitiveness, all those sort of things. That was a bit of fun.
Whoa. That's a pretty crazy experience, mate.
Yeah, and then I went up and set up with a couple of other actuarial colleagues our own consulting firm. So I've been a small business person. We built that from 3 of us full-time and a handful of part-timers up to now. It's still running successfully 20 years down the track, and nice office in Sydney, and some very senior actuaries that work there part-time or full-time, plus a broader set of skills. So that was a very interesting period of running a actuarial/regulatory consultancy for 5 years. And then I got the opportunity to go and run the Actuaries Institute as head of the association. So I sort of ran that for a few years. And then I got invited over to Switzerland to go and be part of the International Association of Insurance Supervisors that sets the global regulatory framework for the insurance sector. And my role was to build a global financial stability framework after the global financial crisis to hopefully reduce the impact next time around, working closely with the bank regulators that are all part of the same network over there in Switzerland. So that was 8 years in Switzerland doing some very interesting global regulatory things. And my contract was running out there, and I knew a couple of the board members here, and they said, would you like to come and take over running this little national association and live in Adelaide? And I said, I've never lived in Adelaide before, but it looks nice. I'd lived in Perth, I lived in Canberra, Sydney's hometown, but no, Adelaide's a beautiful city. So I'm enjoying my stint at running a national association out of Adelaide. I think there's 2 national associations based in Adelaide, and I've got one of them, so I'm quite happy here.
What's the other one?
I can't actually tell you that. I'll find out. I shouldn't know the answer. I will find out.
It's like the Wine Growers Association or something.
Something like that, yeah.
I've got to say that is probably the most full experience background I think I've ever heard doing this podcast. You had something to do. If you're working in superannuation under Keating, like you would have seen the birth of superannuation, or almost, or very closely. That's crazy. I mean, the people you would have been working with essentially would have been setting up what it is that we call superannuation today. That's amazing. And then you mentioned something about working with GST as well, the introduction to GST. Goodness gracious. So, it depends how you look at it. There's some people listening going, okay, so I've got you to thank for losing 20% of my weekly paycheck, do I? With super and GST. But obviously there's some amazing, fundamental parts of the Australian economic system. That's amazing. And so now that you've done, this 8-year stint in Switzerland, how does Adelaide feel? Or I guess the better question is what you're trying to achieve now with the SMSFA a little bit easier than your prior roles, or do you still find that it is as challenging? And where are you focused on? Like what's the future of the SMSFA? Where are you taking it?
Yeah, no, very, very good question. And quick answer is there's just as many challenges here as I've had in other roles. They're different challenges. So you're dealing here with closer to people themselves, their livelihood, their immediate advisors. But there's over 1 million of them. And in general, they're people that have worked in small business, that have perhaps been professional employees in life. So it is the above average income earner that would have a higher proportion of those. But there's lots of small business people that are running your everyday suburban shops. So it does get typecast a little bit as the ultra wealthy. But if you look at the stats, the average retirement income that people are drawing out of self-managed super funds is probably in the $60,000 or $70,000 a year. So it's around average wages, and that's much higher than the average Australian gets in retirement. But from my point of view, every Australian needs help in getting a dignified retirement. At the moment, I'm working in the one part of the system I hadn't worked in before, so that's sort of exciting for me. It completes the tour of duty. I think it's a very interesting sector. It grew a lot while I was out of the country, so I was very interested to see just that rate of growth and what was behind that. And the research shows very strongly driven by people's desire to control their own destiny.
Yeah.
Some concerns about what happens with dealing with large financial institutions of whatever nature they have in terms of not looking after their clients as well as they could. So people say, look, I'd prefer to be more involved, more in control. People wanting different investment approaches, particularly small business people. At the moment, we're expecting there will be interest in looking at those people that have not yet put their business real property within a self-managed super fund. They can do that, and that frees up capital to help their business survive or help their business grow. So it really is a great vehicle for small business people. It's had a fair bit of attraction on the property side. There are some issues there that need careful monitoring. We think they are being well monitored by the authorities, so we're quite comfortable that the rules are okay. They will benefit from having greater reliance on specialist educated advisors, because I think there is a risk with property spruikers going out there and saying, oh, here's this great property, buy off the plan in another state, and we can buy that through a self-managed super fund. That seems to have dissipated. That was a bit of a concern probably 3-4 years ago. So the activity is much lower, and I think the regulators are getting better at sort of noticing that and cracking down on where that shouldn't be happening.
Awesome.
But yeah, I think it's a fascinating sector. The job's great in terms of variety. This morning I'll be talking to ministers' offices, sending submissions to Senate tomorrow. We've got a group of many of the businesses that operate in the sector as a bit of an advisory board, have a session with those on some of the research we're doing, some of the plans on how to feature on case studies of why people find self-managed super funds are appropriate and suitable for them. It's running a team, so I've got 20 staff. Most of them are here in Adelaide, but a third of them in Sydney. So usually I'll be hopping on a plane every couple of weeks to go and keep an eye on the Sydney team and talk to our Sydney stakeholders, members and others. We deal a bit with the state government.
Wow.
It's also running a small business, and I've got a good team here that supports that. So it's a lot of interesting things where our two main customer base are the professional members on the one hand. There's around 3,000 of those, and then also trying to reach out to as many of the million trustees, help them get better educated. We've got a trustee-facing website. We run expos for trustees. We'll have our first virtual one of those in November. We'll run our second SMSF week to promote awareness, understanding, education. And so it's a very interesting role. It's an interesting association, and I think there's probably another 1 million people that will seriously think about joining a self-managed super fund over the next decade or so. And I hope that myself and the team and all our members can help that next 1 million people like we've been helping the first 1 million.
That's awesome. Such a great way to look at it. So basically, continue doing what you're doing, but look to expand and look to double in size essentially, which is fantastic. Do you see anything on the delivery of SMSFs which are making it easier and are reducing the cost for the end client, or is that something that your office is involved in at all? Looking at that sort of, I guess you'd say, technological development.
Yeah, we do, and we sort of monitor the trends, and we try to help facilitate the process of improved efficiency, because that is, again, putting on your best interest hat for the customer.
Yes.
Technology has been one of the main drivers of better service and lower costs in most parts of the world, and that has been a driver in our sector. So if you look around, most self-managed super funds are now administered on one of the large platforms. So there's several large platforms around, and they have good data feeds from banks and investment managers, stockbrokers, etc. And so you have a much more efficient system of having electronic contributions of money, electronic monitoring. I can look up at my self-managed super fund on the app today. I can get daily updates and balances, can see every transaction.
That's amazing.
I can look back historically there. That didn't exist 5 years ago, probably even 3 years ago.
Yep.
At the other end of the spectrum, you've still got people that will bring in their accountant, their shoebox with their printed bank statements. And if you're in your 80s and 90s, maybe you don't want to sort of learn how to drive apps and things. You're quite happy if you trust your accountant and it's a once-a-year activity, and that's well and fine. We don't say people need to change that, but it is changing. And there's those that are in between on their Excel spreadsheets. But over time, we think there will be a steady migration onto modern platforms. And once people are on those platforms, it just opens up opportunities in terms of the ecosystems that connect to those platforms, of getting legal documentation, of getting efficient levels of advice, because the advisor can just plug into the real-time information. Yeah. And some of them are connected to various Xplan, other financial planning software, so you can actually have almost straight through processing of information's on there, link it up with the advisory side of things. Very efficient from the accounting and the auditing point of view. And we are doing some significant research on how cost levels have changed over the last 7 years or so. And we'll probably publish that around November. And that'll show some really interesting trends. And we expect it'll show that the relative cost attractiveness from self-managed super funds is better now than it was 7 years ago compared to larger funds. So we're thinking that's a really positive message to be putting out into the marketplace.
Yeah, I'd be very keen to hear. Hilariously, myself and a few buddies a few years ago, maybe 4 or 5, maybe 6 years ago, it was a while ago now, we decided to just chuck in a little bit of our super and just launch an SMSF and do a little bit of playing around with the investment piece. But we again, you think I'd be all over the tech, and I'm not. We do the shoebox once a year thing, and I'm just sitting here going, oh God, really need to catch up to the modern tech era with the SMSF. But so John, mate, first, thank you so much for coming on and really just sharing some super interesting stories in there. My goodness, you've had a great career, and it's great to see, like you're heading up the SMSFA now, and you've got a pretty clear plan on, what it is that you guys want to achieve certainly in terms of doubling the size. I think that's really good to hear some positive comments like that about reducing the amount that it costs and sort of putting out positive messages that it can be attainable for twice the amount of people that currently have it. And I think that in that field, within SMSF advice, there's such a huge amount of value that advice can deliver. Like advice just happens to be so well placed with SMSFs that, just because your ability to use the breadth of the SIS Act is just, it extends, there's no limitation, right?
Yeah. So, and that's a core thing we do, delivering education to help people get the specialist designation so they can really be seen as the top specialists in the country, and they can be more confidently advising their clients because they've not just got the technical skills themselves, but they're part of a peer group. They can tic-tac with other in person, on XY Advisor platform, on other interaction sources. We run local communities, so that whole education side, we were really set up as a group to educate and lift those education standards, lift the integrity standards, and that just remains core to why we're here, is trying to attract more people that will build up their educational skills. So we've got the best trained and kept up-to-date specialists there, and we've got a pipeline of people coming to fill that, and they're well networked so that they can share those learnings with their fellow professionals and out to the real clients who are the ones that need to get the benefit of that advice.
Awesome. Well, let's stay in touch because, with the SMSFA having their group on the XY platform, we'd be keen to get as much of that education out as possible. So let's have a chat on how we can make that happen.
Excellent. I look forward to that.
All right, very good. Okay, well, thank you very much for coming on. Really appreciate it. A super interesting story there. And it was awesome.
Okay, thanks, Clayton. All the best.
Cheers, mate. Thank you.
Cheers. Bye.